Good evening, everybody. I keep thinking everybody should be off doing something for the weekend. Then I remember there's not too many things we're allowed to go off and do for the weekend. So the reason I'm going to show the kicker signal, we did this not too long ago, but the other night we did in the members area how to scan for the best trades. And the one question that keeps coming up is if you're scanning for good trades and you go through the process and you find 24 good trade setups and you're only going to need 1 or 2 for the next day, how the heck do you cultivate them down to get to the best 1 or 2? So this is kind of a segue into on July 18th, we're going to have a full day training on the top ranked signals and patterns. This is kind of why I always tell people, learn your signals and learn your patterns, because that's the basic information for seeing what's going on in investor sentiment that works time after time. But there is about, I want to say about 18 different setups that that illustrate not only a strong reversal signal, but a very strong new price move. So tonight, I'm going to try to do this quickly for everybody so they wouldn't be here all night, but I'm just going to go through the kicker signal, which is one of the one of that top ranked number. The philosophy or the psychology that goes along with it, and then apply that to, after you've learned your ABCs, which are the signals and the patterns, then you want to learn which ones are the most strongest, and those are usually combinations. So the kicker signal, out of the 12 major signals, the kicker signal is probably the strongest in its own I guess on its own right. That if everybody always asks, well, which is the strongest of the signals? Well, what we've basically done is we've already cultivated the 50 or 60 candlestick signals in the candlestick universe down to the 12 that work extremely well. Meaning you don't want to spend a lot of mental time and energy learning all 50 or 60, because some of them you won't ever see, or you don't see often enough that it's not worth wasting any mental time and energy trying to remember. If you learn the 12 major signals, you're going to have more trades than you ever be able to handle, number one. And number two, they are the most effective for analyzing what's going on in an overall market trend. And once you understand the psychology that has developed or created candlestick signals, when you see the graphics and you understand how those graphics are formed, you pretty much have the same analytical ability to see when a price trend is reversing or continuing as somebody that's probably been in the market for 50 years, which I hate to think that I'm pushing that number myself. So a kicker signal is very easy to recognize. Darn, how do you get rid of that? You're in a downtrend. The last candle opens here, closes down here. The next day, or the next time frame, and I'll use day for our time frames. So there are 12 signals and there's about 8 patterns. But there's about 18, I think, 14 or 18, I haven't counted them, that are the combinations of signals and patterns that are going to produce, those combinations are going to produce extremely high probability trades as well as high profit trades. So essentially the 12 major signals is your ABCs. Your patterns are things that you can easily recognize visually, and then the top ranked signals and patterns are a combination. No, that's not the combination, not 12 major signals and 6 patterns. It's some of those in themselves, but then the combination of signals and patterns. Is the kicker signal the same as a bull or bear sash? I don't know what a bull or bear sash is, CJ, sorry. Maybe they've come up with new terms since I first started learning candlesticks, but I don't recognize that. So if you're in an uptrend, last candle opens here, closes here. The next day they gap it down at or below the previous day's open and go the opposite direction. So, rhetorical question, why the kicker signal so strong? Because the gaps are already built into the signal. And when you're using gaps with candlestick analysis, remember a gap represents enthusiasm to a point where people are willing to trade well above any of the previous day's trading. And it usually indicates when there's panic selling at the bottom or exuberant buying at the top. So, so often I've heard people say, well, their person that they follow or their advisor says stay away from gaps because you don't know what they're doing when they gap it. Candlestick signals and gaps are what produce the biggest profits because we do understand what's happening when they do use candlestick signals in combination with gap. Mario, yes, that's what the whole point of all this is I'll show you what are 2 bullish dojis which are between a strong, what are 2 bullish dojis? We usually call that kind of a double doji sandwich. Okay, so here are the type of kickers we have. The kicker itself, which is usually a reversal of a trend kicker, which usually occurs in the trend, and then what we call a flutter kicker, which got all sorts of numbers to it. A flutter kicker, we'll show that. They all have very strong reversal implications. Now remember, most of our signals, when we're looking for a reversal signal, if we're looking for a buy or see a buy signal in the oversold area, meaning stochastics at the low end of the range, the Japanese rice traders say there's probably a trend reversal. Obviously, if you see a candlestick sell signal in the overbought area, there's probably a downtrend starting. But with the kicker signal, the strength of the signal is so strong that stochastics are not relevant. That reversal is going to occur no matter where the stochastics are. What is the difference between a professional gap and a novice gap? MB, I don't know the answer to that. I guess it's what is the difference between a pound of lead and a pound of feathers? Is a double doji sandwich formed on an upward continuation signal? Yes, that's usually reading the double doji formula. Yeah, that's telling you there's more upside. When a stock gaps up, where is the ideal place to place a stop loss? If it's gapping up and moving forward or moving higher, best place is at the open. Because when they gapped it up and started moving positive, common sense says that's where the bulls are taking control. If the bears are able to knock it back down below the open, that means the bears are still in control. Don't worry, John. I'll babble a lot and I'll keep you all here as long as you don't have any place to go watch fireworks. So here's what we're looking at. A downtrend. Opens here, closes here. They gap it up and go the opposite direction. That in itself tells you there's been a drastic change of investor sentiment, that they've kicked investor sentiment in the opposite direction. And this is usually the result. A very strong price move. Now this kind of deters, or it's not deters, kind of overcomes everybody's hesitation. I say everybody's. A lot of people are hesitant to buy a stock that's already up 3, 5, 10, 15, 20, 80%. You shouldn't be if you can see that that is a kicker signal, because this is the expectation of what's going on. I'm kind of taking a look here. For some reason, my cursor has gone little again. I thought I had made it so it was big. So knowing what a signal is illustrating, first, it opened here, closed here, gapped up and went the opposite direction. That tells you right away there's been a drastic change of investor sentiment. When are you buying? I'm buying as soon as I see it, or somebody in a chat room says, oh, look at XYZ, they've gapped it up. I look at it and it's trading positive. I'll try to jump in it as fast as possible, which may mean that if I'm fully invested, I might have to go liquidate something and figure out where to get funds to buy that position. This is the result of a kicker signal. Whoops, I didn't scroll down. Okay, Brenda, that's a good question. You keep forgetting to do that. This one shows more. On our charts, we've got the red line, which is the 200-day moving average, simple moving average. The blue line is the 50-day simple moving average. The reason we have those on our charts is not because we're using them to make our decisions. We're visually recognizing or seeing what everybody else's decisions are at those levels. Every major money manager around the world uses those moving averages to make their decisions about their portfolio. We've also got the 34 on here, which works reasonably well. But here is the most important one. If you don't get anything out of what I show tonight, at least remember this. The T-line is the 8 exponential moving average. We call it the T-line because it's short for the trigger line. We were trying to figure out how to shorten it when we first came across it. And we first came across it from one of my first private training students that came down from Anchorage, Alaska, and we sat in front of the computer screens for 2.5 days. He loved candlesticks to the point where he set up his own trading website to scalp using candlestick signals. But he called me about 6 weeks later after he had come down to Houston and said, take a look at the T-line. Now, the nice thing about candlestick charts is we know the signals work, or they wouldn't be around after 400 years. So there's a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. So if I took everything else off this chart except the signals, the stochastics, and the T-line, I could trade extremely successfully. Because we know the signals work, when somebody says, oh, put the XYZ indicator on your chart, you can put it on. If it works, you keep it there. If it doesn't work, take it back off. You can see these charts aren't very complicated. And the reason is, this is the important factor right here. The signals themselves. It works in all time frames. The definition of a candlestick signal is it is the graphic depiction of everybody buying and selling during a specific time frame. It works just as well on a 1-minute chart as it does on a monthly chart. I used to trade the E-minis on a 1-minute, 3-minute, 10-minute time frame. Oh, you know what? I just found out that my little cursor is still correct. It just doesn't work on here right. I trade intraday. I'll trade soybeans, cattle, cotton, the dollar off the 10-minute chart. I'm a swing trader when it comes to stocks, meaning I'm using the daily chart, and so I use the I'm going to hold my positions anywhere on average 2 to 10 trading days. So very simple rule, and this will make you tons of money. I was the worst investor in the world. I was even a stockbroker for 8 years, back in the mid-'70s, early '80s. And I got out of the business because I realized the brokerage firms had no more idea about what made stocks go up or down than anybody else. Then when I came across candlesticks and started seeing the logic behind it, I kept saying, this makes sense. So I was making good money using candlestick signals. Then when we applied the T-line, my returns went up dramatically because I wouldn't get juked out of a position. The T-line would keep me in it. Okay, let's make sure I'm not. So would that prepare you for a short position? So what would prepare you? Yes, there's just as many sell signals as there are buy signals. And you could have a sell candlestick or a bearish kicker signal or a bearish any signal. All right, let's see. Still scrolling down. Is there a correlation between the red 200 moving average and the blue 50? No, we're not trading the moving averages. All we're trying to do is identify where everybody else is making their decisions. We're trading the signals. And if they occur at levels that everybody else is watching or making their decisions, like at the moving averages, it just enhances the reality that that's where everybody was buying. Forex, it works on anything that has fear and greed. Stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed. Candlestick analysis isn't directed toward any specific market. It's directed toward what is investor sentiment doing in those markets. Do you use Metastock? Yes, our formulas are already on Metastock. We've spent, Jeff Gibby and I have spent a couple of years formulating so that anytime you go to a Metastock chart and you click on it, it'll show you what signals are, and it will go as far as explaining that signal to you. Okay, I'm not scrolling fast enough here. Can we know if a kicker gap up won't retrace before going higher? Have no idea. But the true kicker signal is it opens and it starts trading positive. Just the fact that it gapped up and started going the opposite direction was our signal. And yes, you want to see it open and immediately go positive. Sometimes they'll have a little shadow below before heading back up. But the fact that they gapped it up is your first inclination or your first alert that there's a major change of investor sentiment. The T-line is the 8 exponential moving average. How do you interpret a kicker at the top uptrend like Tesla? Phil, when we go to the live charts, we'll look at it. Whoops. Would you have entered another contract at the gap on Bruce? I don't know which one we were talking about. And so if you're asking a question about something we've already passed, put the symbol in so we know what we're looking at. Notice a lot of times when stock goes up, blue skies, it's running really high and it's far from the T-line, and it comes back and retests the T-line. When a stock is blue skies, where do you get in or out? Or did you already miss it? Yes, DJ or stock guy. The caveat to the T-line is the further away you move from the T-line, the higher the probability it's going to come back and test it. I'll show you. I'll show you. Let me get through the kickers. And then if we're too far away from the T-line, yes, YS is saying, yeah, you flip to your 10-minute chart. And I'll show you. I'll try to show you some of that. So there's our kicker signal. Now it's even more apparent that they took it down to the 50. They did a kicker signal. Where do you think your next likely target is going to be? Up here. So it just tells you with a high degree of probability there's been a change of investor sentiment. Does a kicker occur during an uptrend have the same strength as at the breakout? They all have strength. AC, I'll try to show you some what we call the trend kicker signal. Sometimes a high wick on a candle that has broken out usually indicates a false breakout. Yes. But you also know when to buy back in. If you have a big up move and it pulls back, you know that's profit taking. So if the next day it opens positive, that means the profit taking's over. That strength is still there. Bruce, now you got to tell me what the question was. Okay, let's go back up here. Would you have entered another contract at the gap up on Mattel? Oh, if I was if I was buying calls, yes, this would be a very good. I mean, just the fact that we know the probabilities are extremely strong that it's going higher. That yeah, that's one of the ones where you buy calls. Okay. John will go to the live charts. Should you set a stop at the open of the kicker candle? If so, that would stop you out at the advent of a lower shadow. Yes. Or your candle would start turning red. We'll get to some live charts, don't worry. If you all don't mind sitting here, I can show you all sorts of examples of what to do if, when. Do you wait toward the end of the day to buy to make sure large candle? No. No, if I see that it's gapped up and trading positive, I'm buying immediately because I've already been alerted to the fact that as soon as it opened above the previous day's close or open that went this way. There's a lot of force. I want to be buying that one. I think I just solved my confusion. The kicker is the previous day's candle before the gap up. All right. Is there a certain percent above the T line that says you get out, or just does it? You can visually see when you're getting too far away. AC, I'll show how that occurs. It's not difficult. Everything we're looking at on candle or candlestick charts is visual. Would you buy when price has retraced following a breakout or wait for the move up? Would you buy when the price has retraced? If it's retraced after a breakout and it's trading back toward the lower end of the trading range, yeah, I'll watch it on my 10-minute chart to see if it's going to start coming back up again. Kicker signal should open at or above the previous day's open that went this way, at or above that open, and go the opposite direction. All right, now remember, this isn't rocket science. This is what happens in human nature that the Japanese race traders have illustrated to us for hundreds of years of their not only evaluating charts, but the Japanese race traders that developed candlesticks did not become wealthy. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries, and they did it on the most boringest trading entity, rice. So, and it was all based upon one factor, human nature. How long would you wait after the open? Oh, shoot, I just sit there and watch it. If it's trading up and I've bought it, I just, don't want it to come back down through the open. Would it be bad to wait for the retracement before you get in the trade? You don't know there's going to be a retracement. If this opened here and bobbled for a little bit, what is the worst trading strategy that most people have? They see something good, it's moving in the right direction, and it's moved up already. What's their philosophy? I'm going to wait for it to pull back so that I can get it at a better price. Now, there's two great fallacies to that type of investing. One, if you're looking at a candlestick signal, what are you looking for? You're looking for strength. If they're pulling back, what's it tell you about the strength of that trade? It's not very strong. You probably don't want to be getting in it if they're pulling it back. And two, you're expecting the immaculate inception, which means you're waiting for it to pull back, and you are so smart that as soon as you decide to buy it, it's going to turn right around and head back up again. That's wishful thinking. If I see something and it's showing strength, I want to buy into that strength because that's telling me exactly which way the investor sentiment is going. Do tails on the two candles make kickers reduce the power? Not necessarily. Now, you don't want to see a big tail to the downside and then go back up. But it's, even if you see a tail to the downside, especially on the buying side, this is still telling you there's been a drastic change of investor sentiment. The cleanest one is where they open it and immediately start trading up. We're going to be way behind schedule. Anytime I see a kicker signal, again, all I need to do is see that they've gapped it up above the previous day's open. Doesn't matter where my stochastics are. This is the expected result. You can see wee little right up here, another kicker type signal that was creating our J-hook pattern. If there's a down tail after the gap up, is the kicker still valid? Yes. Once it gets back above the open, yes. So that's a good entry point. Let's go back up here. You can see how it traded off a little bit. I would watch it, and then if it came back up through the open, what color would that candle be? It would start turning green. And what's that tell me? They're still buying after the opening price. It's heading in the right direction. But if they are pulling back for profit taking, that's not, if they're profit taking, that means they don't have very much confidence that it's going to go higher. Would you buy at the blue candle on the Send chart? Yes. And now, depends on how I saw that. If somebody in the chat room said, oh, look at Sienna, it gapped up, and I saw it was trading positive, I'm buying immediately. But where would I normally have found it? Probably at the end of the day when I'm doing my scans. Well, this is good. Usually I don't have this many questions, and I'm wondering whether I'm teaching things right. So the T-line is the same as the 8-period exponential. Yes, that's the same thing. T-line is the same as the on Schwab's Street Smart chart. Yeah, I think you will find that there's a lot of people now, I say a lot of people, still minuscule percentage-wise for all the traders out there, but there's a lot of people that use the T-line now after participating in a lot of some of our training sessions. Is a kicker in the overbought area a warning of a reversal? No. Kicker in an overbought area tells there's probably going to be more upside. So it's not necessary that there should be a gap in a kicker signal as long as it opens at or above the previous day's open. No, it doesn't have to gap up from there because the gap is already that it closed here and it's opening up here. It's gapped already. No, I've discovered years ago that the way to learn something is to teach it. And so teaching has helped me, my training years ago as much as anything else. If you buy early on in the day of the candle, can reverse, so I usually wait to end of the day once the candle is formed. You can do whatever you want to do. Please give direction on stop placement below the T-line when we can't monitor. If I was, you could always put, let's say I was buying here and I owned here, and you can see how it came back down to the T-line. You can always put each day, you can see where the T-line is, and can't see the number. Let's say it's $40.20. You can always put a stop at $40.10. If it closes, you can put in an order to close if it trades or closes below a certain level. Futu, I saw that one. Again, we'll have to Let me put it here. Food 2. We'll look at it on live charts. Some traders know, I know, use the 5 and the 9. Ron, what I tell people is the basic of candlestick analysis is the signals. Then whatever you can put on your chart that enhances your trading ability, you put on. And if it doesn't work, you take it back off. Sienna. 2 candles to the left is a doji. The next candle is a red. So based on the doji rule, I would have considered a short. Let me go back here. Two candles to the left. This one right here. So where was this when you were getting ready to short? You were already getting down here in the oversold area. So you should have been telling yourself, or looking at this saying, where should I have shorted this? Probably up here after the shooting star failed at the 50 and then they closed below the T-line. Oh, I didn't read far enough. I would have considered a short. But since it's in the oversold region, I would not have taken it. You were ahead of me. I didn't even read far enough. That's true. So you would have done nothing at that point, right? Yes, nothing. Unless I was already short, this is nothing. There's nothing there to make you want to short at that point. Then you saw the kicker and would have taken it when it went above the T-line. Not necessarily above the T-line, but probably by the time I saw it, it was getting pretty close. But here's, again, it's not the T-line. It's the fact that they've already gapped it up and went positive. Was telling you that there was a good prospect that the kicker signal was starting to form. What about in Mattel? A few days it went down to the levels of your entry. Whoops. Yeah, but that doesn't mean anything. Not the level of your entry. If you were entering in here, so I will get to what you should do when something is selling, but there wouldn't have been anything on here that would have told me to sell. Now, if it had come back down through the open, that would have been a different story. That would have told me this is where the bear or the bulls were taking control, and if the bears could knock it all the way back down to the open, through the open, the bears are in control. You don't want to be long in a position where the bears are in control. Is the doji candle after the breakout candle at the arrow an indication of profit taking? Once again, I don't know what chart you're looking at. After the initial entry, where are additional entries on a good trend? Well, if you know what should happen after a strong breakout, it's usually a 45 degree. So if I'm looking at something like this, and I bought some here, this is what we do with our on our options strategy. But maybe I bought calls on this one, and then I can see it's doing what we call a 45 degree, a steady uptrend. And I know that this might have a long uptrend. I might be buying spreads up here for, let's say I can't see the numbers, but let's say a spread that was $5 difference, and I'm paying 65 cents for it, that if it went through the top of that spread, that 65 cents has gone to $5. Okay, back to Sienna. Now I have to know what This question was again. Okay. Is the doji candle after the breakout candle at the arrow an indication of profit taking? It could be, yes. But you've already got the kicker signal. And the kicker signal implies there's a strong reversal. So there might be profit taking. So maybe I've said to myself, oh, I've just scanned and I found this. I'm going to buy in positive trading tomorrow. But they open it lower. But I already know that this is a kicker signal, that there should be more upside. So where do I set a stop? Probably right there where it closed, that if it came back up through there, that tells me the bulls are still in control. And to get into a smaller position, this thing, then pull that currently back up, yep, can do that. The doji did not trade below the previous open. Correct. But, so if I bought it here and it opened here or traded here, I wouldn't be too concerned. Now, if it closed down here, back below the T line, back below the halfway point of this, that would not look good. I'd probably close it out. Now, another statistic that we kind of illustrate, when I first started trading futures, there was the old adage that if you made 50% of your trades correctly, you'd make a fortune, which meant you let your profits run, you cut your losses short. When I started using candlesticks for trading stock, I came up with about 70% of my trades were profitable. Now, some of them were profitable by 0.3%, some by 300%. And I wasn't making great money until I realized that even though 70% of my trades were positive, that meant 30% of my trades weren't. So when I finally acknowledged that in my own mind, that was where that cut your losses short, let your profits run kicked in. Because if I, instead of taking it personally that I got into a bad trade, that I did something stupid, I saw if a trade wasn't working, that was part of that 30%, close it out and move on to something else. That's what cuts those losses short and cuts your losses short and let you move money to another profitable trade. What does it mean if there is a gap up and a kicker? It just means there's a lot more strength. You can see how this one opened just above the previous day's close, whereas this one gapped way up, just a lot more strength. Why the 8 versus the 10? Guillermo, use whatever you want to. In the last 20 some odd years, though, I've found that the T line, the 8 exponential, if you want to put the 10 on there, or if you want to put both of them on there, test it to see what works better for you. At least with the 8 exponential moving average, you know it works extremely successfully. If you want to tweak it to 9 EMA or 7 EMA, that's up to each individual. The 8 works extremely well. Guillermo, if they use the 10 EMA, remember, they don't have as much flexibility. If you're trying to get out of a 4 million share position, you don't just put in a sell order and it clicks off. They have to come out of it. So using the kicker signal adds to pattern confirmation because it's telling you exactly do you rely on other indicators or just the candlesticks? The candlesticks are the primary ones. Then the T-line, then the other moving average and stochastics. But look where this kicker signal occurred. You can see the fry pan bottom, and then they did a kicker signal through the breakout area. That told you that was the breakout. What do we expect coming out of a fry pan bottom? A strong breakout. What's our strongest candlestick signals? Kicker signal. Just adds as confirmation that you're breaking out. Now this is what we call a trend kicker. Notice how it opened here and closed here. It was already in the trend. Then the next day they gapped it up again above the previous day's open. That tells you there's still a lot more upside pressure on that trend. What if the open price is small, like a penny or two higher from the previous day's price? If it gapped up above the previous day's open, that's the kicker signal. It's the gap up. Like a penny or two higher from the previous day's price. Meaning the previous day's close? No, that's nothing. It's the gap up above the previous day's open and goes the opposite direction. How big should a kicker signal be long? The bigger the signal, the more compelling there's been a change of investor sentiment. A doji opening higher than the previous day's close is, well, technically it is, but remember, a kicker signal is a candle that is significant, followed by a gap up with a candle that is significant. How much does stochastics help when entering a trade? Very simple. If you're buying a signal, you want to see it in the oversold area. If you're buying a pattern breakout, usually your stochastics are going to be in the overbought area. So the bearish kicker, again, you're in an uptrend and they gap it down below the previous day's open and start going the other way, that means they're coming out with a lot of force. So I always would be so happy I was in a good trade, good trade, good trade, and then some news would happen overnight and they'd gap it down. And my first thought was, oh man, if they would just take it up one more time and let me out, I'd be so happy. But there's very simple logic. If you're in an uptrend and they have enough force to gap it down below the previous day's open, there's only one thing you want to do. Hit the sell button as fast as possible. What tells you that the candle will not try to fill the gap instead? That's what a kicker signal is. It may fill the gap, but it might not fill that gap for 2 weeks, 2 months, 2 years. We're only trading what's going on in investor sentiment right now. That's right. A daily signal is not done until the end of the day. But if you see this and you see it doing this, you can tell what signal is going to be developing on that day. We'll pull that up. We'll pull square up a bit. Not the after hours, John. If Apple is trading 7.4 million shares during the day, it could move around at night on 20,000 shares. So it's not the accumulative knowledge of everybody buying and selling. Okay, oops, on the EYC chart, does the kicker happen? The kicker happened in an uptrend, not downtrend. So why is that a true kicker? Because this is what we call a trend kicker. It's in the trend, and then it opened here, closed here, then gapped up and went the opposite direction again. So that's your trend kicker signal. And it happened in an uptrend, not downtrend. Yeah, so that's called a trend kicker, which tells you there's more upside. For it to be a kicker, does the kicker candle need to be the opposite of the previous day candle in color? Yes. Yes. So when it opens here and closes here, that meant they were selling that day, creating a red candle, then gapped up above the open and went the opposite direction, and that means they were buying. So if I've got an uptrend and they gap it down, why do you want to close that position immediately? Number one, if they're in an uptrend, they shouldn't be gapping down below the previous day's open of that candle. What's that telling you? You probably got a sell signal setting up. Now, if you were like me, what happens when you keep holding and it's heading down? My first thought is, oh man, I should have opened or closed it as soon as it opened. But I can't sell it now because what if I sell it and it pops back up? Then it continues to go down and I think, oh man, I should have sold it when I thought about selling it. When do I finally sell it? When there's no more time left in the day to hold it. I sell it down here. Now, what does that keep me from doing? If I'd sold it, knowing that a sell signal was setting up right here, that first pain of that little loss is out of the way. Now, I've got much more clear mental thinking saying, wait a minute, they're selling this off. This is a bearish kicker signal. Maybe I should be shorting this here. And maybe I'm getting a bigger profit than what the loss was. So essentially, when I sell it immediately, because I can tell what type of signal is setting up, I've got that money back in my pocket. I can think clearly. Now I can decide what to do with that trade. Kicker can occur anywhere, but the T-line crunch is a powerful one. Yeah. Because it closed below the T-line. Lindsay, which one? Yeah, the fact that it gapped down through the T-line was another indication it was time to go short. Yes, that's all this is the graphics of what happens in human nature. Made lots of money with this one. They gapped down, kicker signal, we went short. What was our first target? To see what happened when it got to the 50. They couldn't hold the 50. What was our next target? To see what happened at the 200. The further away you move from the T-line, the higher the probability it's going to come back and test it. So if you're in the overbought area and you've moved that far away from the T-line, what's your first inkling? You should have a stop at the previous day's open. It shouldn't come back down through that level. Just very simple logic of what happens in human nature. The fact that they gapped it down told you close it out immediately. Where was the first likely target? At least back to the T-line. Yeah, Guillermo, when I do the live charts, then I'll tell Jim to do the double line. Oh, we're not even halfway done with these, and I've got a whole nother list to go through. So, again, just visually recognize when they're gapping down, close it out immediately or get ready to go short. This is what to expect, even on a bearish kicker signal. A major change of investor sentiment. A gap down kicker. Same scenario. There's your expectations. The chance of a kicker happening when furthest from the T-line, no, the kicker can happen anywhere. But if you add the other aspects to it, like the T-line, or the further away you are from the T-line, yeah, that just enhances the probabilities. No cat. So the flutter kicker is something that you can prepare for. A flutter kicker is when they gap it up above the previous day's open, but do a doji. Oh, cat, you're enough to drive somebody to drink. You come over here. I know. Things are rough all over. Now, we have a doji rule, which is prices will usually move in the direction of how they open after a doji. So if I see a gap up doji above the previous day's open, I don't have to rush around. If I did my scan that night and saw this, now I can get ready that if it opens positive, what do I want to be doing? I want to be buying immediately because what's our doji rule? If it opens positive, it's going to trade positive. If it trades positive, what's it setting up? A bullish flutter kicker signal. Why do we call it a flutter kicker signal? Because if you took this little flutter out of here, you have a kicker signal. So the bullish flutter kicker just allows you to get prepared, knowing where you might have funds the next day. Cat, you're right on the keyboard. You're going to be put up for auction again. This just allows you to get in at the appropriate time. Gap up, doji spinning top, you buy on positive trading the next day, the doji rule. So very simple entry. The trade. Let me let's see. What if the candle is slightly above the T line, but indicators 8 all bullish? 8 all bullish are all bullish. What if the candle is slightly above the T line, but indicators? I don't know what you're referring to, but remember, the top priority for any analysis is the signal itself. Everything else is a confirming indicator. Could you call a bullish flutter kicker a doji kicker signal? No, there is no doji kicker signal. It's just if it opens positive after a doji, it's going to move in that direction. Those dojis are, yes, that's setting up that gapped up already above the previous day's open, but now did a doji. Now we add our next trading rule, the doji rule. It's going to move in the direction of how they open after a doji. So you can see there's been a major change of investor sentiment. They were selling it off, they gapped it up, did a doji above the previous day's open. When do you buy? Immediately on a positive open the next day. Oh. Zos is just a kicker, but not a flutter kicker. Well, it could be considered both. I was using this as kind of a spinning top. Even at a spinning top, remember a spinning top is kind of a derivative of a doji. It represents indecisions. in ARA, you would set a stop at the doji or the open of the first candle after the doji. If this opened positive and traded positive, yeah, I'd probably use the doji. That if it came back down through the open and down through the doji, yeah, it didn't break out, close it out. You called a doji a flutter earlier. Yes. The reason we call this a flutter kicker signal is that if you took out this little flutter, then you'd have a kicker signal. So, yeah, don't get hung up on the terms. Basically, if you see a doji gap up above the previous day's open, and you use the doji rule that if it opens positive the next day, it's going to trade positive, that's your bullish flutter kicker signal. All right, we did the trend kicker. Trend kicker is you're already in a trend. You have a little down day, then they gap it up and go the opposite direction. That means there's still a lot more upside. They gap it up, sold it off. Then they gapped it up again and not only broke out, but did a bullish trend kicker. That tells you there's a lot more upside. Do you define a flutter as a doji, or is there more to it? No, that's why we call it a flutter kicker, was that doji was acting like the flutter. Okay, so when to buy? There's your kicker signal, gap up. And this is just kind of illustrating when do most people, when's it time to buy? When you see a strong buy signal starting an uptrend. When is it time to sell? When you see that gap up in the overbought condition. The very simple rule the Japanese race traders have illustrated for us. Where do most people buy? They buy exuberantly at the top. That's what usually a gap up represents. All right, oops, how much more do I have here? Kicker signals are the most powerful of the individual candlestick signals. The T-line dramatically improves the probabilities of the trend. So here's the most powerful statement about candlestick analysis. If the candlestick signals are the graphic depiction of what's going on in investor sentiment, or the graphic depiction of human nature, and the T-line acts like a Fibonacci characteristic, it acts like a natural support and resistance level of human nature. When you combine those two, you've got an extremely powerful combination. But if you see a candlestick buy signal, you can stay long until you see a candlestick sell signal and a close back below the T-line. That keeps you from getting scared out of positions that might look like they're starting to sell off. I would, if I had this and I sold here, thinking, all right, I'll see if without the T-line on here, that if this turns back up, I'll buy it back. But what did I do with that money? I usually went off and bought something else. But I cut my losses, or cut my my profits short instead of letting them run. So what happens when I get into a position like this? It takes about 3 seconds a day to analyze what I should do with that position. As long as it stays above the T-line, and I see it staying above the T-line, I just stay with it. ARA, on the doji day, the day before the kicker day, when it started trading positive, you would have thought it was forming a best friend, and you would have got in, right? Would you have stayed in even though the price over there on ARA. All right, we're probably over analyzing these charts because the analysis comes I wouldn't have gotten in anywhere in here because I didn't have any buy signal and a close above the. That's right, the turkey food. Okay, let me see if I can do this cleverly. Usually, when I illustrate the signals, I can go out and find the day before the kicker, ARA. The day before the kicker, that one. What's the question? On the day, doji day, the day before the kicker, when it started trading positive, you would have thought it was forming a best friend signal. On that day, no, nothing would have shown a best friend signal. There wouldn't have been anything in here. The kicker signal, this was the prelude to the bullish flutter kicker signal. There wouldn't have been any reason to be in this chart long because there's no buy signals and a close above the T line. This gap up, if I had been short, would have told me to get out right away. This is the kicker signal. This down day, then that doji gap up. May not have bought it that day, may not have even known about it until I did my scan at night and found that this was one of the biggest percent movers, but it did a doji after gapping up from a bearish candle. So what's my strategy? If it opens positive the next day, I can be buying this immediately. Okay, let me see if I can do this. The kicker is the green candle above the, yeah, that's the kicker signal. That's the prelude to it, was the doji. That was your bullish flutter kicker. That was your flutter. If you took that out, if you took this out of the picture, you basically have a kicker signal, illustrating there's been a strong change of investor sentiment. Almost got this. Is that a red candle? Yes. That is a kicker signal. Now, what else do you identify in this chart? The fact that it did a J-hook pattern. And what happened when the J-hook pattern held here at the T-line? That kicker signal pretty much told you if this is wave 1, you're just starting wave 3. That's what we call 2 plus 2. That if we can see a strong kicker signal continuing an uptrend, and it's also confirming a pattern, that just makes it that much more evident that this is going to be a strong trade. If the gap up candle is a big red candle, that's called a message. I'll see if I can find a message. I haven't gotten to those yet, so let me go through the kicker type signals. That is a good kicker signal J-hook pattern setup. this, had a kicker signal right here. Notice, so this is what we call your message, Patricia. They gap it up, but it's a red candle. Doesn't look good, does it? Except the message was they gapped it up. There's new investor sentiment in this. But then there was immediate profit taking. So what do we look for? We look for a signal that tells us the profit taking's over, that new message is going to continue the uptrend. Bullish, large down day followed by an open at or above the previous day's open and closing as a fairly large positive candle. Bearish, yes, the opposite. Stochastics are not relevant. Good one, Mike. CODX. Let's make this smaller. Somewhere. I don't know whether I was getting to that. Let me make sure. Yeah, that might have been stretching it. Let's see. This one just did this. Look at the kicker signal, but it didn't confirm today. But we don't take this off the chart because that's a kicker signal. Where do we buy? If it comes back up through the 50, that's telling you that investor sentiment is now making it a point to be entering. Well, Shazam. Where did I find... Is that the right symbol? Maybe it isn't. I can't even tell on that one. All right, I'm not doing very well here. Something I was... what am I looking at here? No. There's kicker signals in here. There it is. Got a bearish kicker signal at the 50. So EOT might have had a bearish kicker signal. I can't tell. I forget these charts get smaller when I move over here. ENPH, look at the kicker signal that occurred right off the 50, and then you can see what happened after that. Workhorse is one that the chat room has got people in this one. And somewhere in here, now you can see the fry pan bottom. There was, on the other chart was a trend kicker signal. So let's skip a beat here. And somebody will say, when do you know when to take profits? Well, this one's gone from breaking out here at the $5 area, is now trading at 21. So what are the warning signals here? Look how far away you've moved from the T-line. And you've done a doji. So where would be a logical place to set a stop when you see a doji in the overbought condition? I'd put a stop just below today's low, because logic says if it comes down through there, confirming a doji, where's the next likely target? Back to the T-line. Yes, that was the one I was trying to remember. We'd recommended ABM because it had a kicker signal right here. Notice how it opened here, closed down here, gapped up. This one failed. Now, this is why we say the probabilities are extremely strong. It's not set in stone, but the probabilities are pretty strong. We would expect an upside, but then the logic says, if this is the candle that told us the bulls were taking control, and they closed it more than halfway down this candle, the Japanese race traders say, the bears are in control, close it back out. Sean, no. You don't know that it's selling off yet. You can, if you see it start trading off, yes, you can start trading or selling it off. But yeah, you definitely want to see the reversal, because this is exactly what we expect coming out of a fry pan bottom. Now you're watching to see when it's time to take profits. Now, just because it's time to take profits doesn't necessarily mean it's time to short. If you're aggressive, yes, you could short it and expect it to come back down here. But for what might happen, you might see it come down here and then turn right around and head back up again, because something is causing a lot of force in this one. There's a kicker signal on DOYU right off the 50. That's the expected results. ZYXI. I think this was a little kicker signal. Again, starting your uptrend. What was the question? Do you buy when a stock is still in a fry pan bottom, or wait for the breakout? That is based upon what your expectation is of the return. So we've been in SRNE because of the fry pan bottom. Now, if you were buying right here, you can see kind of almost a wedge breakout and a fry pan bottom, and you can figure this is probably your breakout area. And that was a 6% return to get to that level. That might not be worth it. But if it was a 15% return just to get to the breakout level, yeah, that makes it more worthwhile. Yeah, the length of a fry pan bottom can be anything. All you're really doing is visually recognizing that there's a big fry pan bottom that you couldn't trade one way or the other until you got to the uptrend. No, where are you referring to as the message? Are you referring to that? No, you're looking at your breakout. Now, if you've got a stock that went from 3 to 10 in 2 days, what do you do when they gap it up in the overbought condition or gap it up way up here? What was your warning? Look how far away you are from the T-line. And where did they come back to? They came back to the T-line. So if I've got something and it's gapped up, what am I doing immediately? I'm watching my 10-minute chart. Now, remember, most people are happier than pigs in doo-doo if they can get 10% return in their portfolio in a year. If you can get 300% return on a trade in 3 days, what do you think everybody's going to do? They're going to start taking profits. Okay, let me go. Here's what so this is what nope. The bearish kicker signals. Newell. Here is just the simple logic of candlestick analysis. We were long, no, we weren't long Newell, NBR. But look what happened once we got up here to the 200-day moving average. There was your J-hook pattern. What happened? They gapped it down and closed at basically at the previous day's open. So what's the simple logic of candles or of human nature? If this is an uptrend, they shouldn't be gapping it down and closing it at or below the previous day's open in the overbought condition. That tells you one simple thing. The bears are taking control, close it out. You add the fact that it did it right here at the 200-day moving average. That's even more evidence. Now, the next day they opened it lower and started trading lower. What do you have? You got kind of a bearish flutter kicker signal. And NVC. You're in an uptrend. Look how far away you are from the T-line. They gap it down below the previous day's open. Where do you think the next target's going to be? That's where you close out the position immediately. I've heard you say many times you refer to your 10-minute chart. Are you able to say on what on that chart you're identifying? The exact same thing. Where are you to the T-line? Let me figure out. If you are that far away from the T-line on your daily chart, and you're way up here, what are you looking for? See if people are going to start taking profits. When is your sell signal? When you see a sell signal confirmed? Well, going from up here to down here, that's a good 15% giving back of profits. Let's see, I'm going to keep you here for a little bit longer. So I'll find one. Let me see if I can find one. If not, I will go to the Tesla chart. Rite Aid. Look at your best friend gap up. What else can you conclude about that best friend gap up? Well, they kind of broke through this downtrending channel. Oh, I'm showing our best friends here because this is the type of thing we're going to be doing on the 18th. I think it's the 18th. Yes. For a full day, we're going to be identifying when the strong signals are occurring and what to do with a best friend and what to expect from a best friend. FedEx, when it did a doji gap up, your best friend, that was your starting your uptrend. The best friend signal is a doji followed by a gap up. OMP, there was your doji followed by a gap up. Where did they go? Right from the 50 to the next target, the 200-day moving average. So this is not unusual circumstances. This is the normal human nature reaction. I think it was that little signal right there I was alluding to. Let's make this big enough. There was your best friend breakout of this downtrend. Where do you think FedEx will go? Oh, they go anywhere. I don't know. Right now, I'd look at it as a 45-degree potential with that gap up, meaning a steady uptrend from here. to my Uber. Whoops. Uber did a doji gap up, did another little doji gap up. So what's our rationale or what's our analysis? If this starts trading positive after the doji gap up coming out of the oversold area, they're probably taking it higher. If they start taking it higher, they've pretty much broken this downtrend. You probably got it. You probably got an uptrend starting. Let's see. I got Rocket on here for some reason. Looks like Rocket did kind of a gap up. There was more of a gap on the other charts. We've had people trading this one in the chat room. Look what it did. Let me make this bigger if I can. Here's, somewhere down in here there was a doji gap up, and when that happened, what happened? There was your uptrend. Hold on to your individual ones until I tell Jim to do the double line. We are in apps right now. Apps started when it came out of the fry pan bottom, best friend gap up. Then there's your J-hook pattern, doji gap up. How long do we stay in this one? Until we see a sell signal and a close back below the T-line. Cats, look at your best friend, doji hammer, gap up. Also kind of confirming this fry pan bottom pattern. So this is a human nature. Where was this one coming from? Oh, the little doji gap up best friend starting this uptrend. I was showing this one for a reason. We recommended this one. Because of the double bottom, because of the morning star signal, kind of the scoop pattern. And here is our other pattern that or one of the other patterns. Remember kind of a doji day? What's our doji rule? It's going to move in the direction of how they open after a doji. What type of magnitude of a day can we have? Same as this, doing the doji sandwich. What's that tell us about our resistance level? It's not there. And if this is a scoop pattern, what do we expect coming out of a scoop pattern? A slingshot effect to the upside. GDS. So here's why you want to know your signals and your patterns and your top rank signals and patterns. You can see what's happening here. Here's wave 1. Here's wave 2, the pullback. The doji's right here on the T-line. And it did a best friend signal. What's a best friend signal tell us? More upside. What's that tell us about our pattern? There's your J-hook pattern. We can already calculate how far up this is going to go based upon this being wave 1 and this being wave 3. J-hook patterns are working. There's NIO, is that part of that automobile? Notice what they did today. Gap up, best friends. Gap up, best friend. So basically we can find the best positions or the best probability of being in good positions knowing what the signals and patterns are telling us. Let's see. That's a good buy signal, yes. Look at what you're seeing. Indecision, indecision, indecision right here on the 50. Then they gap it up. What have they done? Told you they were supporting on the 50, the T-line's not acting as resistance, and this downtrend's not acting as resistance. So let me go to one more chart. To show you what happened in Tesla. Remember back in February, see if I can get this. I think we can see enough of it. But notice, here's all the logic built into one chart. Where do most people buy? They buy exuberantly at the top. We were long Tesla. What was happening here? They couldn't close it below the T-line, just kept moving up. But what was happening here? Where do most people buy? The exuberance at the top. What was this chart telling us? Look how far away you'd moved from the T-line. That was a good fur piece. That was that exuberance up there. So when you're way up there, what was the alert? You're too far away from the T-line. So you flip to your 10-minute chart. Where do you set your stops? You don't want to see it selling below the T-line. Not there. Move your stop up. Not there. Move your stop up. Not there. Move your stop up. Whoops, that's when they started selling on. So where were you getting out of Tesla? And we had people in the chat room getting out of Tesla right here, which meant they were selling out up here instead of waiting to see if there was a sell signal. But here was the alert. Look how far away you were from the T-line. So if you take into just the common knowledge of how human nature works, which is illustrated by the Japanese race traders, where do most people buy? They buy exuberantly at the top. We know the T-line rule. The further away you move from the T-line, the higher the probability it's going to come back and test it. So we already have simple alerts saying, oh, there's exuberance. They're way too far away from the T-line. When that happens, you flip to your 10-minute chart and you get ready to sell when the 10-minute chart tells you when it's time to sell. So again, this isn't rocket science. This is just common sense put into a graphic depiction of human nature. So this is, somebody wanted me to explain what the top rank signals and patterns. Look at Tupperware. Not very exciting. Or somebody told me Tupperware would be a good buy. But look at your bullish engulfing. Now there's your doji sandwich. Now what's the significance of this doji sandwich? What do we know about the doji rule? It's going to move in the direction of how it opens after a doji. And if that doji is sitting right smack dab on the T-line and they open up positive, we already know the doji rule says it's going to trade positive. If we know that, what's that tell us about the T-line? The T-line's not going to act as resistance anymore. You can start buying. Now we've got another doji. What's that tell us? If it opens positive, we can be buying again with the expected target being up here at the 200-day moving average. Tesla. You're starting to move away from the T-line. So what's that tell you? You start watching for a reversal signal. If you're long Tesla, where's a logical place to put your stop? Just below today's low, because logic says if it comes down through there after gapping up in the overbought condition, that's telling you people are ready to take profits, close out the position. What was the Tesla signal at bottom in March? April. Well, came right down. It didn't actually have a strong reversal signal. It just bounced off the 200-day moving average. Yes. So if I'm swing trading and I see the price has moved too far away from the T-line, I flip to the 10-minute chart. So let's see, who asked that question? Oh, what was the? But here's the. That may not have been the first one to be buying. What was the signal that we saw in March? Well, first of all, it was kind of a kicker type signal with a gap up and a morning star type signal, followed by a doji, which opened positive. There was our doji sandwich. So this is one of your strongest, most reliable reversal signals. We call a McMuffin, which basically is a morning star signal by itself is a strong reversal. A doji sandwich tells you there's going to be more upside. So you combine the two, a morning sandwich, your McMuffin, has an extremely high probability that's starting your uptrend. By the way, how long does it take for the ordered item to arrive? JP, if you haven't received it by the end of the weekend, remind me on Monday, and we'll kind of nudge Abraham and see see where it is. Okay, I think that's about all I got. For some reason, I've got GDS circled. Oh, that's because this will probably be bought. I'll probably be buying calls on this one on positive trading on Monday with the expectation of another move of, this will look like 25 points or so, another 25 points. Is this a bullish kicker? No, that's your best friend signal. Remember, a kicker is a big dark candle followed by a big green candle. Zoom is one of the ones that we have held for a while because of the steady eddy. There was a J-hook pattern back here, and now you've got another J-hook pattern. So yes, you could be buying this one on positive trading because what essentially would you have? A doji sandwich breaking out through this, telling you your next J-hook pattern is in progress. John, I like doing this because when I was trying to learn how to invest, I realized there is no place where you learn how to invest. You can't learn it in school because if professors knew how to invest, they wouldn't be teaching school. And again, coming from the throws, here's another J-hook pattern on Yandex, YNDX. Another one that if it opens positive, you've got another 9 points to the upside. So you are buying the calls to the right to buy the stock at a lower price before it trends up. Ron, that's part of this, strategies. which one were we looking at? GDS. It all depends too, depending on the size of the account. Maybe I'm not buying, if I happen to be buying down here, maybe I'm still not buying stock at $64. Maybe I'm buying the calls. But right here, after this price has moved up, I wouldn't have been buying here because that's been a strong move. But I'd be buying here because I can see what pattern is setting up, that they've consolidated and now they're getting ready for the next move up. Are higher price stock signals more reliable than lower price? No. You can find as good a charts on the $1 chart area as you can at the $100 chart area. Okay, whoops, I've kept us way over time. Are there any general questions on candlesticks? Here's one thing that I kind of advocate, that the people that really, or what people really want is, when they ask the question, I've just found 24 good charts in my scan, how do I narrow it down? The session on the 18th is the type of thing that kind of solidifies in your mind which are the strongest charts. So if you find 24 good charts and you're trying to figure out how to find the best one or two, knowing the strong signals and patterns kind of whittle it down to those the best ones. And I tell people, out of the, whatever it is, 14 or 18 top ranked signals and patterns, you don't have to learn all 18 thoroughly. My suggestion always has been you learn 3 or 4 very well and become an expert at it. Know when to get in, when to get out, what to look for. Now you're not at the mercy of waiting for somebody else to recommend stuff or hearing stuff on the talk stations. You can see exactly when you should be buying and selling. So now you gain control of your own, not only your own trading, but your own emotions. You're not trading off an emotional. Yes, Metastock is very good at the scanning. They've got, the reason I like working with Metastock is they've got an excellent group there that they are very willing to help. Mary, if you might want to try one of my books. The reason I wrote books is because everybody would come to me and say, Steve Nissan's books are so confusing. I don't understand it. So when I wrote mine, it was just straightforward. There was no, so anyways. He probably gives you too much information on, and he didn't, when he wrote those books, he was not trading. I'm not even sure whether he does trade. The criteria on this one was, you can see the fry pan bottom, and you can see how the slow curve is set up. You still want to be a buyer, especially if it comes up through the high. Ken, there is a recording. Yes, and so the third book I wrote was Eliminating Your Emotions, because what most people seem to forget or bypass is, even though you can identify and see patterns and know what to do with them, if the trading is still controlling your emotions versus using the patterns and signals to know what the probabilities are in those trades, it basically eliminates your emotions in those trades or in trading. Okay, I guess with that, Jim, go ahead and do the double line. Try to just keep your request to 1 so that we can get out watching the fireworks and eating our ice cream. Far-fetched, you just stay long. There's your kicker type signal. The kicker type signal that broke out through kind of this fry pan bottom. All you can do here is stay long. And Codex backed off near the end of the day, but it's still in this fry pan bottom. Whoops. So you stay long on this as long as it stays above the T line. Whoops. Same scenario on SRNE. You can see the fry pan bottoms. So, that's what I wanted to get to. People were saying, what should we do? Should we be coming out of some of these positions because they're selling off? We'd recommended Ecom. When did we recommend it? A couple of days ago. And it was selling off, and we said, well, that is a left-right combo. But the other facet is this fry pan bottom is still trading above the T line. You want to stay with it. And GRAF, another one. This is the type that we like to find. Notice how it traded flat, and then there was your message telling you there's something new going on. So you stay long on this one. Just have a safety stop because you've moved far away from the T line. If I was long, I'd have a safety stop at today's open. If they have enough strength to come back down through that level, that means the sellers are in control. It started off, yes. Now, this is where you kind of learn what the investor sentiment is telling you. There was profit taking. Not only profit taking, but they brought it back down below the 200-day moving average. Makes it very simple. It needs to open positive and trade positive to tell you the profit taking's over. If it opens lower, what's it telling you? The 200-day moving average is where everybody was taking profits and still selling. OSEX, you stay long on this one. Again, you make sure your volume is good on that price stock. And there's a J-hook pattern with the doji. Makes it very simple. If this opens positive, your doji sandwich breakout tells you you're going to be in the next wave to the upside. Just a very simple concept. If you stay with the signals and patterns, the probabilities are enhanced doubly because, first of all, you've got much better probabilities that it's going to move in the right direction. And then secondly, the market, if it's slowly moving up, the patterns are going to produce much greater returns than just merely uptrending stocks in an uptrending market. And then third, if you're in a pattern, you know what to expect. It's a buildup of investor sentiment. If the market all of a sudden turns, you still probably have an extra day or two to get out of the trades profitably because the trade was, or the pattern was set up because of an accumulation of investor sentiment that you usually don't reverse as quickly. This one you should have been out of. Now we got into this one because of this little wedge formation right here. So the rhetorical question is, did we know it was going to do this? Definitely not. But the probabilities of being in the right place at the right time are much greater when you're using candlestick patterns than just hoping to be in a good, strong stock. Cat, they don't want to listen to you. No, they don't want to listen to you. Yeah, things are tough all over. Good. Right now, the indexes, all you have to assume is that as long as you're above the above the T line, you stay long. Cat, now you're bothering me. You know. These are tougher to trade because they're choppy. Right now, obviously, it's in an uptrend. Roku did a big morning star signal and followed by a doji. There's your morning star signal right here at the 50. Makes it very simple. If this opens positive immediately with the expectation that this next candle could break you out through this level. UPWK, there was a bearish engulfing signal. Not great because, whoops, I guess was just above the fry pan bottom breakout level. So all you can do is be alerted to what to do based upon how it trades on Monday. If it opens lower, I'd close it out. It needs to open positive and trade positive to stay in it. Codex, as long as it stays above the T-line, you're all right. But same scenario. If it closed below the T-line, it's broken your fry pan bottom trajectory. We just did SRNE. You stay long on this one, fry pan bottom. Buying the books, Ken, is that what you're asking? Much cheaper on our website. Jim, do you have the link for the books? And BE broke out the other day. Now expect a 45 degree. Anytime you see these big breakouts, consolidation, now expect it to move up steadily from here. So that has a different strategy. Meaning you might do a spread, option spread. Now this one kind of fizzled. When they broke out and they closed back below the T-line, if I was long, I would have closed it out today, because that's not showing very good strength. I think we did this one. Again, this one you can buy on positive trading. Doji sandwich breakout. BRX, another one that came back down. This one has to open positive to keep that fry pan bottom going. Bosch, nothing. This is just kind of a nothing chart. You're still trading below the T-line. Your stochastics are still heading down. I'd have my money someplace else. And when I say I have my money someplace else, there's too many charts out there right now that look good to sit in something that you don't know which way it's going. That's the whole benefit of candlestick analysis, is you can see when a chart's not working well, and you can move your money to the charts that are working well. Mario, that's a nothing chart. Not really going anywhere. It bounced off the 50-day moving average, but you can see it didn't do a signal. So anytime I see an up move without it being a signal, that tells me there's probably not as much enthusiasm there. Which means, again, I'd be moving my money someplace to where the chart is telling me it's a lot more, got a lot better upside. IXUS. Don't even know what that is. But this one, with the gap up today, stochastics coming up, you can buy it, especially if it comes up through the 200. NIO did a nice J-hook pattern, but I don't know what the difference is between NIO and NIU. Oops. but that's a more concise looking J-hook pattern. In GSX, you can get ready to buy this one. They're your little best friend type gap up. Wave 1, wave 2, going into J-hook wave 3. CVS, nothing. You don't have anything definite here, and you can see the direction. It's not very enthusiastic. GoDaddy, yes. The bigger the signal, the more compelling there's a change of investor sentiment. This is like a methods rising, but it's a methods falling. Notice how they had a big candle down, indecisive up, indecisive up, indecisive up. But what couldn't they do? They couldn't close back up above this level. The fact that they took it back down and closed back below this level tells you there's probably more downside. That is a good short. Square, right now you don't have anything really tremendous other than as long as it stays above the T-line, you can stay with it. Carol, yes, Jim will show you how to get the recording. KLR, yeah, I don't know unless there was some sort of announcement on a Friday evening or a Thursday evening. KLR, just not coming up. MGMX, we're still waiting for this to break out, and it's right there. So if this opens positive Monday, you can buy immediately, because what do you got going on? A breakout. Notice how indecisively it pulled back to the T-line and then started trading positive. So essentially you would have a wave 1, wave 2, wave 3, wave 1, wave 2, wave 3. Carol, are you yeah, I don't know. No, we could have fixed you earlier. How far down will NKLA come? Have no idea. There is a gap right here where the best friend is, which kind of coincides with the 50, so that could be your likely target. NX, that's a nothing chart. Not going anywhere. So even though it had the best friend, what negated this chart? That candle closed back below the halfway point of the candle that told us the bulls were in control and closed back below the T-line. Close it out. Now, the thing that helped me the most is when I finally acknowledged that 1/3 of my trades weren't going to work, I wasn't insulted when it didn't work. I just said, oh, this one didn't work. Let me move to where my probabilities are much, much better. A.O. Smith, slow uptrend. A lot of the oil stocks, I was going to say that Halliburton had been acting better. Yep, they aren't doing anything. So right now, not in any of the oil stocks. This one we're still in. As a matter of fact, I bought some more calls on this one today going into the close, because if this is wave 1, even though you might have missed wave 1, wave 2 of the J-hook, wave 3 of this magnitude, that just puts us in the right... oh, no, it's not that far away from the T-line. Remember, on Monday, the T-line will be here, so it's not really that dramatic. Remember, you're not trading the T-line, you're trading the pattern, and then everything else you factor in. Lulu started out nice, but now it's not that great. If this one opens lower on Monday, I'd close it out. And pin interest bought some calls on this one today because of the doji sandwich gap up. Now look where you are right there. If this opens positive, where do you think your next target could be? The top of this channel. And that one, T-Doc, had basically the, oops, no it didn't. What was I thinking had that same chart? Darn, I forget. But T-Doc, there's a nice J-hook pattern setting up. Johnson & Johnson, usually not a very exciting chart to trade. Still not a very exciting chart to trade. If it opens positive, it's still got to break this little downtrend. It's probably trading positive, but because of the lack of percentage movement, that's where you kind of put on a spread that would be more beneficial. And that's what we do in the options room, is figure out which strategies are the best for a price move. Nokia, and nothing wildly exciting until they break out through this level. Nugget, you stay long as it stays above the T line. What do we have? Gold, still working, moving up pretty solid. I knew it was trading, and it had actually gotten up above 1800. Yes. And I think they reported, NIO reported that they sold their biggest amount, 3,764 cars last month. There was no hand to see. F-SLY, you just stay long. Notice how this broke out with the doji sandwich. And now what do? You just stay long until you see a sell signal and a close below the T-line. Yes, for further reference, there is way up in the top right-hand corner of the page a red X, or X in a red circle. If you're having problems with sound, you go up there, you click out, log out, and then log right back in and see if you get a better connection. Plug did a dark candle. I'd have a safety stop right here at the previous Thursday's close. If it comes down through there, notice how you have moved a good distance away from the T-line. They're probably doing some profit taking. And GDX should be slowly moving up with gold prices moving up. Which one is Patricia? I don't know what you were asking. There's a doji sandwich. There's kind of your little kicker, but I would think that your first target is here. Looks like there's a wee little teeny gap just above that level. IBM used to be the darling of Wall Street. Right now, there's nothing on this chart that would get you real excited. Yeah, I'd be someplace else. What is that one? O-N-E-M. Oh, okay. That, notice all the hammers, the dojis, inverted hammer, doji. Now they've popped up, so all you have to do, that one you just stay long. How far out are your option? If I see something working right now, some of them you don't have a choice. What am I trying to think of? This might be only the July options. But if I think a price is moving right now, maybe I go out 2 weeks. And when we do our option training, we're going to try to do one here pretty soon on the credit spreads, which are very short-term, like 1 week trades. They're not very profitable, but their probabilities are extremely great. But because they're short-term, you can keep doing them over and over and making a little profits a lot. So usually about 2 weeks out. But if I have to go out to the July, yeah, go out to July. Which wave is longer? They're usually about the same. Wave 1 and wave 3 are usually equivalent. Now that's not anything set in stone. It's just kind of a general rule. But basically, if you're getting wave 3 to be the same magnitude as wave 1, then you start being a little bit more diligent as far as watching for a potential reversal signal. Daku, you just stay long. Now you're starting to see a little bit of exuberance, so you start watching for some profit taking. Alt started moving back up because it's still trading in this fry pan bottom. You had a hammer signal yesterday. Today they brought it back up, so I would still think that as long as you're above the T-line, you stay long. When you buy calls on the gap up, are they not expensive? Also, what delta do you use in, at, or out of the money? That's all, Halstead, that's all based upon each person's risk factor of whether they want to buy in, at, or out of the money. And we don't use delta or any of the Greeks because logic says the delta for this trade right here has nothing to do with the candlestick breakout pattern, which is what we're looking for. So don't even pay attention to the Greeks because the Greeks have nothing to do with the new price move of the new investor sentiment. And Zoom, you just stay long. You can still be a buyer of this one on positive trading on Monday. Is there a general time frame you target for options, or is it based on the chart and the pattern? Time frame meaning how far out? When we do our option trading, basically, if it's 3 or 4 weeks or longer, I'm just going to buy the calls. Same thing with the puts. If I'm going to do a credit spread, a debit spread, I don't want to be any more than 2 weeks, maybe 2.5 weeks out. And the reason for that is, if you're buying a spread where you're buying the lower price one and selling the higher price one, and then all of a sudden that price moves huge, which option do you think is going to move the fastest? The one that you sold, the higher price one. So you might be in a very profitable stock price move, but your spread doesn't do anything, or it may even go down because the one that you sold is moved up faster than the one you bought. and then you have to sit there with that money stuck in that position till you get out toward expiration. So I usually keep the credit or the debit spreads around 2 weeks, maximum 3 weeks, and the credit spreads usually 1 or 1.5 weeks out. Okay, are we getting all of them? All right, eBay. We'll try to finish up here so we can all get to the homemade ice cream that everybody makes on 4th of July weekend. eBay, you just stay long. It could be wave 1, wave 2, wave 3, going up another 10 points or so. Oh, 5.9. You stay long. Notice how it's staying above the 3T line, let alone the T line. The 3T line is the 3 exponential moving average, which works in conjunction with the T line. What was average movement over past 5 weeks? What was average movement over past 5 weeks? Hey, Mike, you got me there. I don't understand what that question is. CrowdStrike. No, Cat, you're going on the auction block for the lowest bidder. J-hook pattern on CrowdStrike. You can buy this one on Positive Trading. Cat. Okay, I guess, oops. Oh, no, Cat, you're in the way. Microsoft is usually not a very good trader just because it's so heavy institution. But right now, as you can see, it's in a steady uptrend. All you can do is stay long on this as long as it stays above the T line. We did workhorse. Right now, you set your stop below the low of the shooting star. Remember, when they gap up in the overbought condition and do a signal, that's telling you that, I mean, this is what the Japanese rice traders have illustrated to us for 400 years. That's where investor sentiment is starting to get reversing. So put a safety stop right here if you're long. It shouldn't come to that level. Darn. The real estate, it needs to stay above the T line to maintain that uptrend. ASTC, did I do that right? That's a nothing chart. I'd have my money elsewhere. Oh, yes, you can close the debit spread. But what happens, Ray, is if the price moves up strong, let's say you bought let's say a stock's trading at 50, and you bought the 50 calls, but you sold the 55s. So you've got your net debit spread. Let's say you paid $2 for it. I'm just picking out numbers. Then all of a sudden, let's say the price skyrockets up to 58 in 3 days. Well, the $2 spread now might go to $1.80, even though the price has gone up, because the 55s moved up a lot faster than the 50s. So the spread between the two got smaller. So you might sit for a few weeks at $1.80 until you get closer to expiration. And where's your maximum profit? It's on expiration day because you don't have any premium or time premium left in either one. So theoretically, if it closes above $55, there's going to be a $5 difference between the 50 and the 55. So you might get stuck in it for a while. David, just email Abraham at candlestickforum.com. He'll show you how to get set up as a member. Yeah, this cat sits right in front of the screen and tries to chase down the arrow. New skin breakout today, so you expect a 45-degree, kind of the same trajectory as what it was doing. So this one becomes a very simple analysis that if it's going to do this, maybe we do a spread. That would be the most effective. Is that a symbol, Mary? Well, it is a symbol. All right. You can stay long. Just make sure your volume's good on that price stock. Just stay long as it stays above the T line. And Bud, the king of beers. You can think about buying this one if I would use today's high, because that would tell me the downtrend has been broken. All right, everybody, have a good 4th of July weekend. Still lots of money to be made in this market. Oh, it's way past everybody's bedtime. So with the employment numbers starting to come back, that's probably going to be fuel for a continued uptrend for a while, with that kind of still adding confidence to investors. So with that, everybody have a good weekend. We will see you bright